Hey guys, what is up? Faz here. In this video, I will explain you the market maker model as quickly as possible. This is a very powerful model, and if you can learn to execute this model in the right way, you will become a very powerful trader. Alright, so let's get on with the video. Alright, so you have your high time frame PD array. It could be an auto block, could be a breaker block, could be a fair value gap, could be a significant high or a low liquidity level, right? Could be a liquidity pool as well. So this is your high time frame PD array. Price comes back into your high time frame PD array. Now, once price comes into your higher time frame PD array, you have to identify the market maker model. So what essentially is a market maker model? So it is basically an original consolidation. So you have to identify a consolidation phase, and then you have, in this cell example, you have a distribution 1 phase and then distribution 2 phase, and then price comes into your PD array, gives you a market structure shift, and then we utilize these levels. So you identify the original consolidation first, right? Then you identify the first distribution. Now the second distribution is not necessary to identify, okay? Once you have the first distribution identified, so you have consolidation, a push down, a pullback, right? And then a push back down, right? This is what I call distribution. However, if the charts were switched, right, I would call this a accumulation. So let's say this is the consolidation phase 1. So these are just different names, okay? I'm just calling it. So when you are bearish, you call this distribution phase, and when you are bullish, right, you call them accumulation phase. So you got accumulation phase 1, then you got accumulation phase 2. This could be a consolidation right here, but let's talk about it here. So it's very simple, guys. You identify a consolidation phase, so then you have a sell side of the curve where price is going down, right, like that, into your high time frame PD array. Once price comes into your PD array, you have to identify original consolidation. You have to scout out the market maker model. And how you do that is we're going to the charts, right? So let's say your high time frame PD array is daily time frame. Price comes into your daily time frame, you drop down to the 1 hour time frame, and then you look for a consolidation phase. So once you have identified the consolidation phase, look for a distribution phase 1, right? This is not necessary. Distribution phase 2, price comes into your PD array, gives you a market structure shift, and then you can get a low risk buy here. Okay, now we can't long till the high of the consolidation. All right, so, and we are going to use mitigation blocks. So what are mitigation blocks here? So this is the sell side of the curve, this is the buy side of the curve, right? In the sell side of the curve, where we were coming down, we have to mark out every single bearish auto block. So there's going to be a bearish auto block here, right? Then there's a bearish auto block here, a bearish auto block here, right? So now in this bearish auto block, I want to see a fair value gap or an auto block form, right? So we have this bearish auto block here, right, in the sell side. Now we have a market structure shift, so we are in the buy program. From here onwards, we're going to go long, okay? Keep going long. So we're going to utilize the mitigation blocks, the old auto blocks in the sell side curve. So this is this bearish auto block. We drag it along like that, right? Price breaks through it. And if price leaves an auto block or a fair value gap, right, inside this auto block, right, then you can take an entry here. Then price breaks through this another auto block, right, leaves a fair value gap or an auto block here or a volume imbalance, you can take your entry here, right? And once price breaks this, you can go long here if there's a fair value gap here. So now one good rule of thumb is you can keep longing if you are below the 0.5 level. That is like the best time to get into the markets. Once price goes above the 0.5 level, the probabilities decrease, okay? So this is literally it, guys. This is the market maker model. I don't know why people overcomplicate it so much, but I'm going to show you guys examples and it's going to be crystal clear. So it's literally that. You get a consolidation phase, you get a distribution phase. So let me try to invert the chart. Okay, so let's say this is the other example, right? So we have, a consolidation phase, and then we have accumulation phase 1. This is a pullback. The pullback is called accumulation phase 1. Price accumulates orders. Then we have a pullback up, accumulation phase 2, right? And then we have price coming into our high time frame PD array. We get a market structure shift, right? Then we utilize the mitigation blocks to get our entry. So this here could be your entry from the fair value gap or an auto block in the premium, right? And then once you have price break these mitigation blocks, which are going to be the old bullish auto blocks in the buy side of the curve, right? So this is written sell side, don't be confused. This is buy side. So let me do this right there, as you can see. So we're going to utilize these mitigation blocks until this level is hit. Now I suggest that you don't target this level, just take 1 to 2 or 1 to 3 and just go home. Okay, there's no point in holding the trade, and yeah, I think it's bad for your psychology, personally, from personal experience. So that is pretty much it, guys. Let's get on with the examples now. All right, guys, so here is an example number 1. So I have marked out a daily fair value gap. So this box right here, right, this level is a daily fair value gap, right? And now we are in this daily fair value gap. So let's identify our consolidation phase here. Okay, so just by looking at it, the price here, you can see we had this consolidation phase here, right? You don't have to overcomplicate this. Look at this, right? It should look like a consolidation. Just draw a box and it should look like a consolidation like that. So what happens then is we have price making us a distribution phase 1, right, before coming into this fair value gap. So we have a pullback, right? This is distribution 1, and boom, right there, when price comes into your PD array. So now what we want to do is we want to wait for a shift in the market structure, and right away, what do we have here? We have the shift in the market structure. So now remember the mitigation blocks right here. You can also say that this is a breaker block and also an old auto block, right? So we can, and there's a fair value gap inside this level. So we wait for price to come into our entry zone. And right there is where you're gonna go long, right? Simply put your stop here. Just put your stop right above, somewhere around here, and you go for this high, giving you 2.63. And let's see how this plays out. So right there, the take profit was hit, and as you can see, right after price takes out the high of the consolidation, we had a sharp rejection from here. So yeah, that's pretty much about it for this example. Let's move on to the next example. All right, guys, so here is an example number 2. I'm looking at NAS 100. So these two lines is a daily fair value gap, and now I'm on the 1 hour time frame. So price comes into the daily fair value gap here. So now once that happens, we want to identify the original consolidation phase in the sell side of the curve, right? So this is the sell side of the curve. Where is the clear original consolidation here? So this right here is an original consolidation for me. Then we have a distribution phase 1. Then we have distribution phase 2, right? And we have another distribution phase here, right? This around here. So let me mark this out. So you can have unlimited distribution phases. It doesn't matter, but you have to identify the first original consolidation and the first distribution in this example. So price comes back into the daily fair value gap. We have a market structure shift. So now this bearish candle is our auto block. So this is going to be our low risk entry right here. Our take profit level is going to be this high, but I suggest you get out when 1 to 2 or 1 to 3 is hit. So playing this through right here, now what do we have here? We have a mitigation block, so an old auto block in the sell side of the curve. So we want to wait for price to break through that, and once price broke through that, you can see we have this tiny little fair value gap here, right? So we can take our entry from this fair value gap. Our stop goes right below this the low here, right? And we can target here. So let's see how this trade plays out. And this is very powerful, guys. Like if you use, watch my other videos on the YouTube channel and learn some other techniques, you can combine these things together and use with different strategies here. So we haven't hit the take profit level yet. right? So eventually we're gonna hit that right there. As you can see, we hit that level because we had a clear draw on liquidity. So this market maker model is very accurate and very strong, guys. Okay, and remember, when price you know, when we get a market structure shift, every single PD area is going to be respected. So you can see we have mitigation block here, then we had it here, but since we were outside the 0.5 level of the range, so using this right here, you can see buying above the 0.5 level is risky, so you don't want to do that. So we took this entry because this was below the 0.5 level, and we also took this trade here, and that gave us a very solid trade. However, I recommend you get out once you hit 1 to 3. Let's move on to the next example now. All right, guys. So here is the last example. So I'm looking at USD CAD, right? So this right here is the weekly high, a significant weekly high, right? So for the weekly time frame, we go from weekly to 4 hours time frame. Okay. So this is the weekly high. We took out the weekly high, and once we do that, we drop down to the 4-hour time frame. So now our goal here is to identify the original consolidation in the buy side of the curve here. So this is the original consolidation. You can see we have a high here, high, and another high. Then we have a low. That was there's another low here. So that is like an actual consolidation phase. Then what do we have? We have accumulation phase 1, right? And we can say we have accumulation phase 2 right here, right? So it could either be a consolidation or a pullback, a simple pullback, doesn't matter. But this has to be very important, original consolidation. You have to see consolidation, okay? So now what we simply do is we wait for a shift in the market structure, and right away, what do we have here? We have a shift in the market structure, right? And we have this fair value gap. You see this tiny fair value gap? Oops, my bad. Right there. This is where we're gonna take our first position, right? And I always suggest you take only one position. All right, you don't need to like keep on taking positions until this level is hit. Just go for 1 to 3, but for the sake of this video, I'm gonna target this low here. So let's see how this plays out. I'm gonna actually go to the daily time frame so it goes quicker, because I don't want to waste the time. And the trade goes on for the, of course this was a swing trade, right? It went on for a lot of days, but this is just showcase that it works on every single time frame. Okay, so right here you can see the 6.65 risk reward was hit. And yeah, you can be, whenever you're in the trade, you can be extremely confident that, okay, the trade is going to go in my direction. So that is pretty much it for the video, guys. Yeah, I'll see you guys in the next one. Goodbye.